Welcome to this explainer. Today, we're stepping right into the shadows of the global economy. Imagine we're standing in front of this massive, string-covered investigative corkboard, connecting the dots on a system that operates right out in the open, but somehow remains entirely invisible to most of us. We're going to adopt the lens of an investigative journalist here to uncover a hidden code. It's a structural reality where ownership has completely, and I mean completely, eclipsed labor in America. We aren't just looking at how wealth is made, we're decoding the actual machinery of modern capitalism.
In America, the richest people stopped working for money a long time ago. I mean, read that again. It literally sounds like a line pulled straight out of a dark economic thriller, doesn't it? But it's actually the foundational truth of our modern system. We're taught that hard work equals wealth. But the reality? It establishes a starkly different paradigm. While the working and middle classes survive on salaries, basically trading their time for a paycheck, the ultra-rich survive and frankly thrive on ownership. They don't work for money, they own the assets that generate the money.
Section 1. The Hidden Wealth Code.
To really grasp this, we just have to crack open the data from the Federal Reserve. And honestly, it is shocking. On one side, the top 1% holds an immense, almost unfathomable share of the nation's wealth. And on the other, the bottom 50% of the population shares this tiny, sliver-like fraction. This isn't about opinion, right? This is about the numbers that define our reality. This data proves unequivocally that the game fundamentally changed the exact moment asset ownership became exponentially more powerful than actual physical work. It is a mathematical certainty built right into the code.
So what's the actual engine driving this massive divide? Well, it all comes down to capital gains. When you sell an asset, like stock or real estate, for more than you paid for it, that profit is a capital gain. Now combine that with the power of compounding, where your wealth just generates more wealth all on its own, and this acts as a hidden, frictionless engine. And it's an engine designed to specifically benefit billionaire wealth over standard labor salaries. Think about it. You can't compound a standard hourly wage, but you absolutely can compound asset value into infinity.
Section 2. Inside the Wall Street Machine. Now, this wealth code doesn't just exist in a vacuum. It is maintained and heavily controlled by massive Wall Street titans. We're talking institutions like BlackRock and Vanguard that operate the levers from behind the curtain, creating this really cinematic contrast in our modern era. On one hand, representing labor income, we see the very real decay of suburban infrastructure and the haunting imagery of empty office buildings. They're symbols of a struggling middle class tied to stagnant wages. On the other hand, representing asset ownership, we see towering New York skylines, sprawling billionaire estates, and massive bank vaults. It's a literal physical representation of a systemic collapse of middle-class stability, standing shoulder to shoulder with the massive, impenetrable asset accumulation of the elite.
To understand how these institutions control so much, we have to look at their tools. Take ETFs, or exchange-traded funds. Think of an ETF as a master key. Using a really simple analogy, it's kind of like a basket filled with various stocks or bonds. So instead of buying just one company, institutions bundle entire sectors of the economy into these baskets. It sounds completely mundane, I know, but this mysterious, yet totally factual structure allows massive funds to quietly influence the entire market. They're absorbing retirement funds and dictating the flow of global capital completely from behind the scenes.
Section 3. AI and the New Elite. Because this already massive divide, it's being hyper-accelerated right now by a totally unpredictable new force, the artificial intelligence boom. AI isn't just a fun tech upgrade, it is a fundamental wealth multiplier for the people who already hold the keys. If we trace the historical evolution of wealth shifts, the Industrial Revolution first moved labor from farms to factories. Then the white-collar corporate era moved labor into office buildings. But the modern AI automation boom is entirely different. Unlike previous shifts that created new types of labor, AI threatens to replace the labor itself. The stark fears of white-collar job replacement are very real, because this time, the technology is designed to generate output without the need for human wages.
And you can actually see this playing out right in front of us. Compare the explosive, absolutely vertical stock ticker rise of an AI giant like NVIDIA against the flatlined, stagnant growth of traditional, failed, mid-sized companies. This is the prime example of modern AI wealth creation. We're essentially watching the relentless efficiency of automated factories and algorithmic software directly contrast with the death of traditional, labor-heavy businesses. The wealth isn't disappearing, guys. It is simply consolidating into the hands of the tech asset owners.
Section 4. Collapse of the middle class. Now, if we treat this like an urgent intelligence briefing, the fallout for everyday people is actively happening.
According to the World Economic Forum's Global Risk Report for 2026, this isn't just an American issue anymore. The WEF identifies extreme inequality as a major interconnected global risk. We're talking about crippling inflation, extreme consumer debt, an inescapable housing crisis, and unprecedented wealth concentration. When we compare our own domestic financial risks with these global economic stability reports, the picture is crystal clear. The system is flashing red for the average worker.
And look, if you want absolute proof that the people at the very top know exactly what's happening, just listen to Larry Fink, the head of BlackRock. He said, AI benefits asset owners first, making the middle class mere spectators. That quote perfectly highlights the exact institutional insight we've been tracking. AI specifically and deliberately accelerates the divide. If you own the AI assets, you win. If you rely on selling your labor to survive, well, you're being sidelined to watch the wealth accumulate from the bleachers.
Section 5. Shifting labor into assets.
But hey, we can't just sit back and watch this decay from those bleachers, right? We need a practical defense strategy to navigate this highly automated capitalism. We have to shift our mindset entirely. Step 1. Understand the wealth code, which is exactly what we've been doing today. Step 2. Begin actually participating in the system by investing in ETFs and stocks. Step 3. Acquire tangible assets, like real estate. And Step 4, which is the ultimate goal here. Shift your personal focus from purely relying on labor income to building personal asset ownership. You literally have to convert the sweat of your labor into assets that compound while you sleep.
So, we're going to wrap up this explainer with a dark but incredibly vital question for you. What side of the wealth code are you building for your future? The American economy has fundamentally transformed into a high-stakes thriller where ownership is the absolute only true currency. The files are open, the data is clear, and the institutional giants have already made their move. The system is going to continue to compound with or without you. So, are you going to remain a laborer, or are you going to become an owner? Keep learning, keep questioning, and I'll see you in the next explainer.